everyone. This is David Mandel. Thanks for the great intro. As he mentioned, my background, I've built and exited 4 companies over a 28-year period. And then with everything exciting going on in tech, decided to stay away from starting another business and just go full-time into investing in the next generation of startups. Spent a lot of time back and forth to Silicon Valley, the Bay Area, seeing where the tech hub was, and made a lot of investments, mostly through others that are syndicating deals up there and starting to get some deal access. Over time, started to realize that in my own backyard here in Southern California, there's amazing tech, there's amazing programs, as Sergio mentioned, the various venture studios, but particularly the universities have amazing accelerator and incubator programs to support their graduate students. In every field, the business departments have them, but the science departments of different types have amazing programs for postdocs to stay on and do research and develop. And yet, all the attention seems to stay on the Bay Area. And yes, it's exciting, it's sexy. There's a lot of cool stuff going up in Northern California. A lot of unicorns come out of there, but it's also overblown. There's so much money chasing deals that every founder from startups, the minute they have an exit, start another startup, but also start investing as angel investors, and eventually often like what I'm doing here, what's termed micro VCs. They make small funds and raise money from others to invest in all their friends up there that are running startups, and it just percolates. There's a ton of money chasing early stage technology in Northern California. Being very active here in Southern California, spending the last 6 years or so attending hundreds of events, every pitch day from universities, being active member in Pasadena Angels, Tech Coast Angels, and other organizations here, seeing the local community, I realized that Southern California and other hubs like this, such as Boston and Austin, Texas, and even Toronto in Canada, have amazing research going on, amazing founders starting technology startups with the tech they developed in every field conceivable, just as good or better, and often more innovative because it's slightly different than what's going on in Silicon Valley. And there's less money chasing it, at least at the early stages. Southern California has a lot of money down here, and there is some great venture capital firms down here. But what's sexy in Southern California is, esports, direct-to-consumer brands like Dollar Shave Club and all those kind of things. Everything obviously to do with Hollywood and entertainment and so forth is huge down here. The deep tech and emerging technologies are getting a little less attention in Southern California. And that's where, there's still hundreds of us showing up to every pitch day everywhere and going around the universities, but it's not the Silicon Valley money and the other big funds at the early stage. So I saw an opportunity there. I was doing that as an individual angel investor, as others have. There's hundreds of us in Southern California that are active angel investors supporting the community. Eventually, I've decided to formalize that into a fund, and I have this series of funds so that basically each fund invests in a year to year and a half worth of 20 to 25 deals, so you get a basket of deals, because investing in early stage technology is risky. Each individual deal probably has a 50% chance of not becoming a great success and just having a, either failing or having a mediocre exit. But together as a basket, they're a great asset class. If you have a basket of 20 to 25 deals, you have a good chance of getting a nice blended total return at the end of the day. So I, rather than referring people in to say, okay, come angel invest with me, come join these groups, come at all the pitch days. Most people don't want to do that work. Great if you do. You're welcome to talk to me about how to get more involved. I'm always bringing people in. But there's also passive ways to invest in these startups through funds like my own and others. In particular, here's an example of what emerging tech is. Say, well, what's emerging tech? Everyone's talking about emerging tech. Well, on one side, the fields, as you can see on the right here, it's everything from agriculture to literally space. It's literally rocket science and sometimes not. Robotics is a hot field, drones. In a sense, everything that's using AI and machine learning, because you can't do any of this without it. IoT, as was mentioned before, when you take sensors, IoT, 5G technology, and AI, you put those together, you can do amazing things. The convergence today of all these tech, the new emerging tech that are coming together, are creating opportunities to solve real world problems in almost every field imaginable. And it just takes a group of founders who understand how to use this cutting edge tech and put it together to solve a real world problem. And it's everything. I mean, in our portfolio already, we have everything from drones making deliveries to oil rigs in the ocean to sensor devices that are helping pig farmers not have the mama pigs crush the baby pigs, which is apparently a big issue in farming. So there's everything out there, and usually very elegant, simple solutions that are combining emerging technologies to create the solutions in a way that you couldn't even do 2 or 3 years ago. And these ideas are coming, as I said, from all over, not necessarily Silicon Valley. They're coming from Austin and Boston and everywhere else in between. There's a lot of startup incubators and accelerator programs that take very early stage companies, or as Sergio talked about, they're sometimes called also venture studios that almost like initiate companies. That's great. Personally, that's not my idea of venture capital. My favorite saying has always been, ideas are smart and all the founders are smart. Ideas are cheap, all the founders are smart. There's a million great ideas. Every time you hear of something new out there, you'll think, half of us will sit there and say, oh, I thought of that. Well, yeah, we all think of these things. They all seem like, yeah, I've had the idea. That's nothing special. It's the execution. Ideas are one thing, being smart's another thing, but actually executing, building a product, shipping it quickly and building it economically, getting out there and getting people to pay for it. That's what matters. So as an investor, what myself and most others are looking for is that sweet spot of having some early traction. Founders that have ideas, if you're out there and you're in university, you're doing some research, or you're just some guy off the street who has a great idea, don't look for funding. Build it. Build an MVP, a minimum viable product. Build something. Get some people to test it and use it. Get you some feedback on a real product, not your friends and family saying, oh yeah, that's a great idea. If you build it, I would be a customer, because people don't want to hurt your feelings. They'll always say it's a great idea. You have to get out there and get strangers to actually pay you for it. When you can get early customers actually paying you, that's real traction. Build something simple and ship. You'll never know until you ship. And once you can prove you do that, then you're fundable. Then myself and everybody else will be chasing you to fund you when you go to pitch days. You go to a pitch day and say, oh, I have this idea and I want to raise money to build it. You won't raise any money. If you go out there and say, hey, in only 6 months, we put a team together, we built this, and we already have 50 customers paying us $100 a month each for this, and we're getting 10 more customers each month, then you got our attention. We're interested. We'll write you a check. That pretty much summarizes the process. You would think that, oh, I have a great idea. Why didn't I get funded? Well, I'm a very small venture capitalist in Southern California, and yet I get pitched about 500 pitches a month. Pitch days like today, pitch days from every university program, there's usually from 8 to as many as 30 pitches in one event. We can attend multiple events per day. On top of that, there's 20 to 30 deals a day inbound, whether it's LinkedIn messages, direct emails, website inquiries. We're bombarded. So we can filter through all that, but we're not going to talk to everybody. From that, we talk to a few that we think might be on thesis for us, and others do the same. And then you try to look for the right stage. And the vast majority, as I emphasized before, the vast majority are just too early. They want to get funded for the idea, and you really have to bootstrap the idea. You have to go out there and, if it's research, you have to go through university programs, get grants, do what you need to do to spend several years doing research. VCs are not going to fund your research. If it's an idea to build some software product, some app, some other system, build it. Just build it. Build the simplest version you can, get out there, get people to use it. then you can get funded. We fund 1 to 2 deals on average per month, sometimes a little more, but usually it's averaging 2 a month, and it's out of 3 to 500. So that's really how steep of a funnel it is on this, and how much, how many people want to raise money versus how many get funded. Some of what's out here, there's angel groups, Tech Coast Angels, Pasadena Angels, Los Angeles Venture Association. Nationally, there's the Angel Capital Association, which is an association of angel groups, all great groups to look up and look into if you have any interest in this space, or feel free to talk to me. I can help anyone get connected to anything. Part of the way I get all the deal flow, as many others do, is just by being a member of all these groups, being on everyone's list, so we get invited to all the pitch events, and then also investing myself as a limited partner in other in all the incubator funds and various programs out there, so that when they're graduating, we already got to know them. If we're investors in those funds, we get to meet the cohorts as they're going through it and get to have our pick before graduation to see who we may want to invest in from the next batch each time. There are lots of other programs. As far as our fund, we're the particular fund we're in right now is about halfway deployed. We made 14 investments already this year in this fund. We still have room to take on some more investors into it to finish out everything, because we paused the fundraising when the pandemic hit, so we never did our second close, so that's still open, which it shouldn't have been. And we're reopening that. We actually reopened that in August, and now looking to fill that. As far as deal flow, startups are always welcome to apply. Anyone that wants to learn more about us in particular, or just about the industry in general, you can go to emerging.vc or reach out to me directly on dmandel@emerging.vc. Thank you.